Hi there, welcome to Wyckoff Technical Analysis session for Peaq. So, if you're new to my sessions, here are the key takeaways you can expect from the session. Let's start with the weekly chart of Peaq. For 3 weeks before this week, Peaq has been trading pretty horizontal, and currently it's pointing towards another test, which from a macro perspective, this weekly chart, there isn't a lower point that's been found yet because Peaq is pretty fresh and young. So this test is pretty much confirmed, but how deep the test would go, that's the question. Okay, so we are already at the test stage of the Wyckoff accumulation cycle. It's another test after the one we have back in the entire August period. The question here is, would that turn into a spring, meaning a much lower point than what we have seen? Because that can happen in a Wyckoff accumulation cycle where there is a very low point, much lower than the selling climax or even subsequent second test or test, and that may happen during this time, given all the macro situation that's been turning south. So that's already happening, and this, I would say there's a 20% chance for that to happen. And also, if it doesn't fall below this red key level of 0.06, then there's still a chance of quite high, actually. There's trading sideways, like between the orange key level of 9 cents and the red key level of 6 cents. Alright, so going up to the sign of strength now turns to a much lower chance, and then eventually that's the wishful thinking that we see that platform period of backup and last point of support, but these would be further down the timeline given the current situation, and we see a piece of Red Sea as of today. Okay, so that's the big picture from the Wyckoff perspective for Peaq. And before going into the daily chart, just quickly check the Bollinger Band and Keltner squeeze. Currently there's no squeeze happening, but you see the top purple line has gone into the orange very early, and now the bottom edge got very close to the orange as well since October 6th. So I consider a squeeze has started already, even though the indicator hasn't shown the patch at the back yet, because the calculations the indicator is doing is that both purple lines have to be within the orange for that indication to show up. So with this as a backdrop, let's look at the daily. Daily itself, even the indicator has shown last Wednesday, October 29th, the squeeze has officially started. So when the squeeze happens, what comes after is bigger price swings. It doesn't always happen in a way that it swing up and then down. Sometimes it can swing downwards before the price swings up. So much like what happened over on the left. So for Peaq, it's interesting in the daily chart. Every time you see is like it swings up first before it comes down. But if you look at more charts, you know that's not the case. So be careful if you're new to this indicator. Don't think the price will always swing up first when these shades appear. Okay? It's not always like that. It doesn't tell us which direction the swing goes first. It only tells us a swing is about to come. So back to the daily chart Wyckoff stages. So previously we put up these tags, asking ourselves, would this be a mini distribution within the bigger context that we talk about in the weekly chart? So here, since in the previous session we were still discussing whether this is actually a mini distribution, and now it seems it's been confirmed, so I'll change this tag to blue instead of yellow. Blue is the usual color that we differentiate the distribution against the accumulation cycle. So our upthrust was at the beginning of October. That's around the yellow key level of 14 cents. Okay, and then eventually we get to a point. Let me enlarge this, because if you're on a mobile device, that should look better. Okay, we're looking at this particular section over here. So previously we talked about a potential downtrend that has formed, which the breakout happened, like exited the downtrend on the 25th, just last week. But then eventually the price tested the orange resistance line of 9 cents and got rejected. What's more important is today, this candlestick over here has fallen outside of this uptrend, this blue box, the bigger blue box. Okay, that was the previous uptrend. And I just want to make a little bit of adjustment because it's deviated from the bottom of those candles to make sure it has really fallen outside of the box, not that it's because of this like rough drawing. So as of now, we can see this smaller box during October 25th all the way to October 28th. This ceiling, this edge of that downtrend acted as the support of those 4 days. They never fell below or back into the box. But then eventually, now the price comes to challenge the red key level of 0.06. That's getting very close to the lowest point that's been tested around August and early September. So that's where the last accumulation cycle, those tests and spring stayed. So there were 3 times. August tested 2 rounds, and then eventually the spring happened in early September. And now we are getting back to a level that's very close to that point. So that's why the question marks I put in here previously. This, like 3 weeks almost, 22 days of horizontal trading period, was that actually a sign of weakness, or is it the beginning of the accumulation cycle, meaning a preliminary support period? Because if we look at what happened in June, that's not the case, right? It's falling pretty straight, I would say. There were fluctuations, but then it's not something horizontal like this. So that's why I put up a question. Have we seen the selling climax yet? Was the October 10th the one? And it seems like it's not right now. So there are 2 explanations to this, or 2 pictures we can see from this. One, let's use this yellow text for the time being. Assuming we can get rid of this, that shouldn't be the case now. 1. This is the preliminary support period, this entire horizontal trading. And then the selling climax is about to reveal. Alright? This hasn't happened yet, obviously. This has to happen after we see the selling climax, but that's then immediate stage after the selling climax. We'll see a rebound. So assuming that's scenario 1. If the price comes down and tests the red key level, found support because June, that was the selling climax, and the subsequent tests all are at this level. But it doesn't mean, already mentioned previously, selling climax doesn't mean it's the lowest point of an accumulation. A spring can get lower. So for Peaq, it can go lower than the 6 cents level. Okay, assuming that's the case, this is scenario 1. Scenario 2, this particular period is an accumulation. So let's use another color. Let's say use this lighter blue or maybe a green. Okay, let's use green. Assuming the preliminary support period was there, and then this was actually the selling climax. So happening earlier, just 2 weeks ago. And eventually there was automatic rally, second test, and sign of strength as well. And what the price is doing now is getting towards the spring. So that's scenario 2. Okay. The difference between these two is that for the yellow scenario, we're still at the early stage of an accumulation. For the green one, we are at least at the mid, if not the late stage, because an accumulation can last for quite a long time. So look at what happened back in June all the way to September. It lasted for 3 months. If we count from this point, the October 10th, to where we are now, we're less than 1 month in. We're just 24 days into this. So anyway, this can continue between the 6 cents and 9 cents level. But if the price is getting towards a spring, expect it to get lower than the red key level of 6 cents. That's what happened back in August and September as well. I draw this line over here. I always mention it. It doesn't mean that particular price, that number, is the exact location of the level. A level is a range. So it can go a little bit lower or end up a little bit higher. Alright? So that's from the daily chart. If this continues, this first line of support is the red, but then it may be seeking a much lower point than that during this cycle. Because for Peaq, there was no history for us to take reference. So if you are trying to buy the dip, you have to really understand your risk appetite. Okay? It doesn't mean hitting the red line already gets to the lowest point. You have to make sure you understand how much risk you can take. Okay, I think that's all for the Peaq. It's across the board, it's not optimistic. Just before we finish, because we already talked about this box, I just want to quickly adjust this to see if we can find any indication from the recent price actions. Just quickly pull this over here. Assuming this trend is continuing this way, and just trying to look for where to put the center line. That's where it should be, and today the price is bouncing from that center line as well. So no particular breakout indication at the moment, but then we know if this really is where the downtrend is, the box that I've just adjusted. When we get closer to like around the 3rd week of this month, there is a potential breakout time point. So assuming the price continues to trade within this triangle, we'll eventually get to that point where the big guys will tell us whether it's going to trade sideways between the red and orange, meaning breaking outside of this channel box, or is it going to continue with the channel box, meaning the spring is likely to show up all within this month in the next 3 weeks. Alright, so thanks for joining me for Peaq. See you in the next session.